Ahead?
Not a straight line, but yes. I mean, the market generally is forecasting the end of the recession, big consumer demand. Only 18% of the money coming out of the government has come out, so we got a lot of money to come in the next 6-9 months, plus demand. Plus, overseas markets economies are starting to get better. I mean, it's a great story.
Don, what do you make of this? Liz has been reporting this too. Seven out of the 10 worst trading days ever happen in September and October. But are we seeing animal spirits, or is it what you're talking about, government stimulus money from around the world? Which is it?
It's stimulus. It's pent-up demand. It's a lot of cash on the sidelines. It's people saying, gee, I get 0.2, 0.1 in a money market fund. I can do that for 6-9 months, but at some point, I've got to think of my retirement.
Evan Lazarus, you're on the other side of this trade here, and you're betting against it. But everybody who did, and believe me, I think there are a lot of logical reasons to be worried about this, has lost money over the past couple of months. You still think that this will come to pass, that we'll see a downdraft?
I think that 1 year ago today, the markets were rampant with fear. Today we stand here now, we are somewhat rampant with greed when you look around some of the media outlets. And some of our long-term technical indicators at these current levels tell us that your risk as a retail investor here is the greatest, meaning the markets have given you an opportunity, a corrective rally over the last 18 months to raise cash, and now the cash is king. Aggressive and active traders and professional traders are really going to look at these levels for shorting opportunities.
Evan, but last year at this time we were reporting that it's time to shut the New York Stock Exchange and everybody should retire, given the calamity days we were seeing, the Armageddon days. And now the story is, sell all your paper assets, buy gold, and move to Idaho. That's what I'm hearing from one trader on Wall Street. So which is it? I mean, you sound pretty bearish, but really, should we be that bearish?
Well, markets are filled with emotion. We see fear in different cycles, and we see extreme greed in other cycles. But I think the ones that successfully navigate the markets are the ones that consistently evaluate their risks. And at these current levels, the risks are not advantageous for the retail investor to initiate new positions or to even go as far as to say we're in a new bull market. That's only going to come with time.
Well, you see, I actually have the best of all worlds. I live 50 miles north of Yellowstone Park on the Yellowstone River, and I manage global money from Montana and here in New York. And I got to tell you, we've got everything you want in the market. We don't have as much greed as we had a year ago. We don't have the leverage. We're unwinding the leverage. And one of the reasons the economy is going to grow slowly, not rapidly, is that we're still unwinding leverage. But having said that, the money that's on the sidelines is not going to go into in my opinion, is not going to go into fixed income. It's going to go into equities. But
Don, when the government pulls out that protective pillow from underneath with all the stimulus, because at some point they're going to have to, what then happens?
Well, that is the $64 question, or now $64 billion question. And the answer is, will the consumer and will private industry get traction to move forward and continue the growth?
Well, even with stocks going up, storm clouds, as, hey, Evan just pointed out, are still in plain view.
And gold really skyrocketing today. The dollar is down. Now, there were reports, though, now denied that Arab nations are trying to get off the dollar for the oil market. So is the message to America that we are not the economic powerhouse that we used to be?
Well, we also should mention that all the countries involved have denied this, but we welcome Nicole Petalides, Gary B. Smith, Nancy